It's the season of provisional updates, numbers coming in from companies, and we had Signature Global that reported their numbers, the provisional numbers, like I said. The real estate developer has reported a 184% jump in pre-sales amounting to 278 crores. Quarter on quarter, the numbers soft, but that's largely the case across the industry because Q2 remains to be rather soft for the sector. Rajat Kathuria, CEO at Signature Global, now joins in. Rajat, hi, good morning. Thanks for joining in. Year on year, we've seen a massive jump on pre-sales. Collections have also improved significantly. Q on Q, of course, it is soft, but from what I understand, this is an industry phenomena. You want to walk us through what went beyond these numbers, which projects have seen traction, and how are things looking?
So thanks for inviting us to your show. So we saw very good traction around one of our projects in Sona, which we launched just towards the end of the last quarter. So that project, within a span of, let's say, 10 days, I think saw tremendous response. We sold quite well in that project despite the Shraddh period going on. So by and large, the story remains the same, that as new projects are being launched, we are seeing very good traction and absorption from customers around these projects. So the way we look at it is that if you look at the trailing 9 months, as in starting January of this calendar year, we are kind of almost nearing that 3,000 crore per quarter sales, whether it was the last quarter of the previous year, financial year, or these 2 quarters. I think we are seeing consistent trend in the market.
Let's talk about this significant project that you referred to, Sona. And when you launched it, it was supposed to garner a potential revenue of 5,000 crores. How much have you achieved so far from this project specifically? And is there any possibility of, and when do you plan to achieve that 5,000 crore number? Do you still maintain that? And when would you achieve that?
So we'll eventually achieve much higher than 5,000 crores from this particular project. It's upwards of 7,000 to 8,000 crores is what we tend to achieve out of this project. We just got 10 days of launch period, and we achieved more than 2,000 crores of revenue within the short span of 2,000 crores from this particular project.
Rajat, hi, good morning. Tamanna here. Just wondering, wondering what your FY25 target is looking like in terms of launches. You had a hefty one at 16,000 crores. Is that now on track? And then what's the picture for H1?
So, see, we are on track, Tamanna. I think by December of this year, we would have done that. Most of those, or we may have crossed, that 16,000 odd crores of launches, which we tend to do during this financial year. So we are on track of our launch pipeline for this year.
And have you seen Q2, the industry sort of mood coming in is that Q2 has been a little softer. Have you seen that at all, overall, in kind of demand? No.
No, not at all.
It's been quite the reverse.
Yeah, not at all.
Okay. In terms of MMR launches, inventory, what is the kind of outlook that you have?
So see, we are launching projects in Gurugram, and if we look at the entire decade of experience, the situation is that as we are launching projects, it's getting absorbed. We see no change in that trend. Market is hugely supply constrained. Gurugram, anyways, is a new city which has really taken a center stage in the NCR real estate market over the last, decade or 15 years, you may say. There is a lot of supply constraint. We are just trying to fulfill that huge demand which exists. And there is no softening whatsoever because even if you look at this Sona project, we literally 10 days, we've achieved more than 2,000 odd crores of sales. If we had like a full month to sell the project, maybe, we would have even lost our last quarter's sales performance. But given that we've entered this auspicious, season of Diwali and festivals, we feel that a lot of sales, will continue to, happen during this quarter as well.
Rajat, good morning to you. Just wondering, we always talk about this point that pre-sales look very, very strong. Not necessarily that collections are that strong? I mean, they're good. 28% is a good number. Nowhere close to the pre-sales number. I'm just trying to understand how would these pre-sales translate into actual collections over the second half, because I think it will depend on the pace of the execution that you outlined for yourself, right? So how would that work in the second half? Because your first half pre-sales have gone bonkers, really.
So, Neeraj, there are a couple of factors one should look at while looking at collections vis-a-vis pre-sales. Is the fact that how much of the land on which we are doing projects is owned by the company. Signature Global has always had this philosophy of working on land which is owned by the company, and we've not, as a preference, we've not gone out and done collaboration agreements with landowners. In case projects are sold with time-linked or construction-linked plans and land is primarily owned by the company, the pre-sales converts into collections. That's been our trend as well over the last many years, that as pre-sales have grown, collections have grown in tandem with pre-sales. We are very confident for this year with regard to our pre-sales and collections target of 10,000 crores and 6,000 crores respectively, that we should be able to achieve both of these targets for the entire fiscal year.
Got it. Okay. So, we'll address those flashes. But Rajat, just one quick question, and then we'll get an industry conversation going, because we also have Puravankara joining in. So I'd urge you to stay on if you have the time. But just one more Signature Global specific question. You safely are on target for FY25, I presume, based on what you told us the last time too. Are there projections that you now comfortable giving for FY26 based on the pre-sales that you've already done? It may not be a formal guidance, but just a thought around what the numbers could look like or the growth could look like.
See, I can't be talking about the exact guidance, but the philosophy is, our thesis is that on an annualized basis, is the kind of market dynamics we are in, to assume 20 to 25% growth on an annualized basis is something which is very achievable. So let's see what we close out this year with for the full year, basis which we'll roll out the formal guidance for the coming year.
FY25, since you are saying you'll cross 16,000 crores in December itself, that number goes up?
16,000 crores in terms of launches, Tamanna. For the full year, we had given a guidance of 10,000 crores. We've already achieved close to 60% of that annual guidance. We feel comfortable with that annual guidance being achieved.
Live pictures coming in here of Governor Shaktikanta Das arriving at the RBI headquarters. Will we see an interest cut? Unlikely. But the interesting thing about the real estate industry is that despite no cuts in sight, they have not really seen too much of a problem as far as demand is concerned. So Rajat Kathuria, of course, continues with us. He's CEO at Signature Global, but we're also joined now by Abhishek Kapoor, Group CEO at Puravankara. Abhishek, great to have you on the show as well. And since, we're talking in the context of the monetary policy, we'll hear from the governor in about 15 minutes from now. Just trying to understand what impact, if any, the interest rate cycle is going to have. We might have a rate cut by December. Does that bode well for you?
Good morning, and thank you for having me on the show. Definitely, yes. Current interest rates have had no impact on the demand. As we see currently, we believe that the current interest rate environment is good for the real estate industry per se, but a reduction will definitely have a positive impact on the demand side as well as overall on the industry side.
Okay. And just a quick word from you, Rajat, on the monetary policy side of it and what expectations you have, if any.
So I think let's just wait to hear the governor. No expectations per se. I agree to Abhishek that there is so much of demand that interest rates per se at the current levels not having any negative bearing on the demand side. And there's this confidence amongst customers that interest rates not going up from here. A lot of people are assuming that going forward they can only come down, which is giving them confidence while making the purchase and taking mortgages.
Abhishek, hi. It's also Samina joining in. Let's start talking about a little more company-specific news flow that we have. You've acquired a pretty significant piece of land in North Bangalore to the tune of about 3 acres. You want to share with our viewers what is the gross development value of this project and when can we expect it to come on stream?
Look, I'll give you overall perspective of what's happened during the year. So for us, we have added about 6+ million square foot of overall area in new business development that we have done across India. With a GDV of almost 12,000 crores. If you look at last year's number, we have sold about 7.26 million square foot. And if you look at what the plan is for this year, we're looking at launching about 12+ million of new projects and about 4 million square foot of new phases of the old project, totaling to about 17 million square foot. So keeping that in mind and the volumes we are doing our business development. Of course, North Bangalore project, which you asked about, is a 3+ acre project, and that's a residential development we are looking at doing with a GDV of 700+ crores. So on an overall basis, I think the target for us, and this is just the H1 of this year, is to continue to robustly add to our pipeline of business, keeping in mind the next financial year's growth plan as well.
Before we go on to that, you want to share with me what is the target you've set out for Puravankara in terms of sales for FY25 and where do we stand at? How much has been accomplished already?
Look, we don't give the sales value guidance, but as I said, what we have planned and which we have announced is 12+ million square foot of new projects which will come to the market. Most of those projects are in fact coming into the market in the third and the fourth quarter possibly being the largest, and that is typical industry cycle any which ways. In the first quarter itself, we sold about 1.2 million square foot, resulting into about 1,128 crores of sales. For the second quarter, we are yet to make the announcement on the pre-sales number, which is expected towards the end of this week. So, on an overall basis, we are quite happy. We see positive momentum in the second quarter, like always, and we will see better momentum in the third and the fourth quarter, which is largely on the back of new launches. I think, I kind of agree what earlier was discussed in terms of the gap today is of the launch and of what supply is we are able to bring to the market for a strong branded player. So I think we are on the same track. We're expecting launches in the third and the fourth quarter, and therefore we will see how that goes.
Just, want to get a sense of the kind of the industry-wise. Let's go a little industry-wise right now, Abhishek, and let me come to you on this. Maybe not specifically to Puravankara, but there is a sense that we are looking maybe at a bit of a go easy on new launches and on bookings. Are you seeing any of that happening, or are you expecting the festive season to change that mood and Q2 would anyway have been softer?
Look, I don't think Q2 has been softer. I think Q2 was better than Q1 for sure, overall for the industry. And I would expect, as the typical industry cycle, given that today, if you look at the inventory levels across the country, they aren't significant at all. I mean, more or less, it's less than a year, and that continues. On ground, what we're seeing on demand side, we are not seeing any let-up. I think the branded strong players will continue to see traction in the coming 2 quarters, and I'm anticipating that whatever as an industry we see as a growth, we will achieve that. On the other hand, on the price, I think the industry has reached where we will see inflation plus 2 or 3% average incremental price appreciation, which means that the inflationary impact of costs which were to be absorbed or passed on to the consumers because of the inflationary pressure in the past has already been taken into account. So we don't see any major increases because we're not seeing any major increase in the commodity prices. Of course, we have to wait and watch and see what happens. But on an overall basis, I think we'll see high single digits, inflation plus 2-3% increase. But of course, project to project, you will see much larger differences depending on what the cycle of the project is or stage of the project is. But on an overall basis, as I said, I think the demand continues to be robust.
Rajat, one quick question, and we very often, when we talk about real estate and the company, we are so focused on pre-sales, collection, and of course the top line, is that we forget to talk about what's happening on the bottom line. There's clearly an increase in raw material cost. How is that impacting your bottom line?
So, Tamanna, the increase in the commodity prices, or let me put it reversely, that increase in the end product price has been higher than the increase in the landed commodity price. That's at least been the trend in our local market over the last 2 to 3 years. And hence, we don't, foresee an impact on the bottom line vis-a-vis the increase in the cost of production.
Okay, so net, just one set of questions from my end. If indeed there are liquidity easing measures, if indeed it is dovish commentary from the Reserve Bank today, and if indeed we almost believe that there is going to be a rate cut in the next policy, I want to understand if sales get impacted at all, or would sales effectively be linked to the economic factors and not necessarily a 25 basis point rate cut or liquidity measures. Rajat, this first to you and then Abhishek to you.
So, Neeraj, any kind of rate cut is a big welcome for the industry because, it adds to the optimism and momentum, and it helps in decision making of the customer that, we are getting into the rate cut cycle. So even if there's a 25 bips rate cut, people would assume that over the next 1 year, we can see 50 to 75 bips sort of a rate cut, and hence it will ease the decision making of a lot of families. What we need to understand is that whether we look at Bangalore or we look at the Delhi NCR market, there are almost lakhs of families which are getting added to the bracket where they can go ahead
think of buying a home.
Make some housing purchase. It really helps in the decision making.
Fair point. Okay. Fair call, Rajat. Abhishek, do you believe that too? I mean, normally people with 25 basis points will not really matter that much.
Neeraj, I agree with Rajat. I think the demand is robust. I think it is very, very much economy and, the economic cycle that we are in and that activity we are seeing. It's dependent on that, and we are continuing to see that demand come into the market. So I don't think there'll be any meaningful impact. I think we'll continue to see growth in sales as we have seen earlier. Yes, the only thing, as I agree with Rajat, is that it possibly might help the people to take decisions, make it easier or make a larger purchasing decision, because it also directly impacts the affordability of an individual, because the interest cost is directly linked to the affordability of how much loan can be given to a buyer. So I think in that sense, it will be helpful. And of course, given that it's a start of rate cut cycle, we believe that in next couple of years, general direction seems to be that there will be a further rate cut. So overall, it'll be positive, but I think it's really, really economy driven. And that's how you've seen in the past, even with the increasing interest rates, we haven't seen any impact or let up in demand.
All right, gentlemen, both of you, thank you so much for taking the time out and being with us. Really appreciate your time this morning. Let's hope for a good policy. And in fact, that is what we focus on.